that you can actually be charged to tax, even if the government does not know how much you're earning. This is very, very true. Now, today I'm going to tell us about presumptive taxation under the Nigerian Tax Reform Act 2025. I know we are all preparing for January, so stay with me and I will take us through what you need to know in order not to fall victim of presumptive tax. My name is Yomi Kukoi. Welcome to the Rent and Accountant channel. And today we're going to be talking about presumptive taxation. Section 29 of the Nigerian Tax Reform Act of 2025 says that if a person's income cannot be properly ascertained or records are not kept in a manner that permits proper assessment, then the tax authority may assess that person under a presumptive tax regime, meaning that they can actually guess and decide on how much tax you are going to be paying. Now, under that regime, the taxable income or tax liability is not derived from your actual profit or earnings, but instead from benchmarks or proxies such as business sector, your turnover, your asset base, your location. Yes, your location or other presumptive indicators. In effect, the tax authority may estimate that you should be earning what typical business conditions in your sector. Under that regime, the taxable income or tax liability is not derived from actual profit or earnings, but instead from benchmarks or proxies, such as your business sector, your turnover, your asset base, or your location, or other presumptive indicators. In effect, the tax authorities estimate that you should be earning any amount of money just because other people are earning such amount of money in your sector. That is not a very easy thing to defend. Again, the Nigerian Tax Act explicitly targets informal sector. That means like people like you that don't keep records, small traders, business name, sole proprietors, and other micro enterprises. Groups that ordinarily they don't like to pay tax, they don't keep records, and because they believe they're not doing a lot of business, they don't have proper accounting, audited books, or any other such formal accounting or financial records. Now, the presumptive tax regime is to be operational via regulations issued by the minister on the advice of the Joint Revenue Board. Now, it means that this is coming up sooner than you think, from January. Now, so let us drive straight. Now, under the presumptive taxation, how does this work in practice? Now, don't forget that on a typical business, you are supposed to have the records of your business, of your sales, or your purchases, or any other transactions that happen in your business. But a lot of people don't take the time to keep all the records that are required. So the first thing the presumptive tax target is first is that if you do not keep formal accounts or receipts, meaning that invoices of your own purchases or receipts or payments that you have received, you don't forget that invoice and receipt shows the difference between how much you have purchased and how much you have sold your goods. So this is where profits, at least the gross profits, are determined. So if you do not have such documentation, such documents, and these are very common in market, street trade, casual services, and the gig economy, the tax authority may still assess you for tax, and they're using approximately such as turnover band. So if all this money goes into your account and they cannot determine what is your cost, what is your profit, or your business types, just because you are into a type of business, and the other people might be keeping records, or even though their situation is different, or just because you have a shop in Lekki or in Asokoro or Mitama or in somewhere in the country, these are the things that they're going to look at and determine, you know what, somebody have a shop here, is doing very well, and that person needs to pay tax in a particular level. Again, so rather than computing your actual profit, the tax may be based on a flat rate. They might just assume a profit margin and decide that, you know what, go and pay 100,000 naira, go and pay 2 million naira, go and pay 5 million naira. So depending on how generous or conservative the proxy assumptions will be. Now, rather than computing your actual profit, the tax may be based on a flat or assumed profit margin, meaning that somebody can look to your business and say, this kind of line of business, you guys should be making at least 20% or 30% and all that. And if other people are making that, or based on their own situation, able to make 20% or 15%, you are going to be assumed to be making the same amount of profit, and your taxes are going to be determined based on that. Now, it depends on how generous or conservative the proxy assumptions are. This might result in higher than actual profit, especially in lean periods. Every business has their high and low periods. So if you do not keep your own records, then you are going to suffer an assumption which may not be in your own best interest. And don't forget, again, that this is a fallback when records are missing. So it means that when you don't keep records, this is what the government is going to do to make sure that you also fall into the tax bracket. And so it is your own interest to ensure that you have all the records such that you do not overpay taxes. Now, why does the government want to use presumptive taxation? Now, this is an easy way of moving everyone into the tax bracket. So when people see that they're going to be paying taxes, which is not representative of their actual business and what they're doing, then people might want to go and do formal registration, keep better records, or even adopt some fiscal tools like digital receipt, their payment systems. All these things are going to make sure that their business has all the required records that will make tax assessment very, very easy. And it's also in your own interest too. So I am suggesting first that one of the things that you need to do, if you don't do anything again in your business, make sure that you keep all the right records. So having said that, there's still a lot of uncertainties around this presumptive taxation. Don't forget that the law actually empowers the tax authorities to tell us how they are going to manage this presumptive taxation system. Meaning that, so we don't know how it's going to work. And there's a lot of gray areas. One of the gray areas is that what benchmarks or proxies will be used. Is it because you're in a line of business that they're going to charge every line of business starting at zone profit? Or is it your turnover band? Is it your asset thresholds? Or is it your location multiplier? Just because you're in Lagos or you're in Abuja, wherever you are, those are the things we don't know what is going to be used. But since we don't know, you don't know, I don't know, then it is important that the only way you can safeguard your business is to make sure that you keep all the right records. Again, are there going to be some safe harbor minimum? It's going to be like some sort of like a minimum tax, meaning that if you're in a line of business and in a specific industry and you don't have records, this is the amount you're going to be paying at least, or for a minimum threshold, turnover threshold. What's it going to look like? We don't know. So these are also one area that's not yet been clarified. Again, so how often will the assessments be? So are you going to be assessed on an annual basis, monthly, quarterly, half yearly? We don't know that. So these are also areas that's not yet been clarified by the government. Now, will you as a taxpayer, will you have a recourse? What does that mean? That if you feel that you have been over assessed, maybe the tax liability is not representative of your situation, where will you cry to? We don't know whether you can appeal or you cannot appeal. Can you object to your assessment? All these are things that have not yet been clarified, but then this is going to be part of the exposure that will come up when this tax type, the Section 29, actually becomes operational. And lastly, Section 29 is targeting people in the informal sector. Actually, the administrative burden will might be beyond the capacity of people in this particular sector. So we don't know what burden they are going to have to carry, especially in the payment, digital payment. Not everybody has internet. Not everybody has bank accounts. Those are, and then there are going to be that issue around e-invoicing, all such similar things. So how will the minister or the tax authority, how will they deal with this administrative burden that are going to be placed upon people in this particular area? These are the things that we're all waiting for. But like I said earlier, it is better for you as a person to keep your records than to wait on this kind of uncertainty. So, in conclusion, what is presumptive taxation? I said earlier, taxation by guessing, meaning that if you don't have records, they're going to guess and they're going to slam you with a certain amount of tax. So the only way you can you can protect yourself is by keeping adequate records of your business. Now, the Nigerian Tax Act of 2025 uses that presumptive taxation as a flexible, simplified tool to bring everybody onto the tax net. So it's better for you to come into the tax net yourself, or you're going to be hardened or railroaded, and it may not be in your own best interest. It's better for you as a small business to have business records. Secondly, the government believes that it lowers the barrier to bringing those people into the tax net, in that it is easier for them. They don't have to do anything. Once people start seeing those assessments, they're going to come forward by themselves. Also, for informal sector individuals, staying compliant and documenting revenue where possible is better than being taxed on an assumed income. Nobody knows your income. You know your income. It's better for you to determine it professionally. Overall, what I would suggest in this video is that one, as a small business, an informal business person, the tax authorities do not want to differentiate that whether you're a big business, small business, you're a micro business, and all that. Everybody will have to pay taxes in order not to overpay. And because of all these tax-free allowances, that if you are a small earner, that you pay less taxes. If you cannot prove your income, you're going to pay. So it's better for you to have the right records such that you don't have to pay money that you are not owing. Thank you for watching this video. My name is Yomi Kukoi. My channel is called Rent and Accountant. I want you to subscribe to our channel on YouTube, and I want you to like, share, and if you like what we're doing, please make a comment on any area that you want us to cover in subsequent videos. I'll be happy to do that. Thank you very much, and see you on my next video.